So inflation looks like it's here to stay. If you look back in time, inflation doesn't have one peak, but it has a peak and a trough, and typically tends to peak three times. Going back 100 years, the trend has been something similar to that. Gold also traditionally has been inversely proportional to inflation, and it has been a good hedge against inflation. If you look at how much gold you required to buy a mean home in the 70s, you probably require same or lesser amount of gold today than you did back in the 70s or the 80s or the 90s. So gold as a hedge to inflation is an asset class I really like for it to have some amount of a proportion of your portfolio. I think is a relevant strategy going into the next year. Interest rate cycles, I think, will continue to go up until they are higher than inflation. Maybe at least 100, 200 bips above inflation, before which inflation actually starts to come down. So by virtue of all of these factors, we recommend, having a 10 to 20% allocation to gold in the portfolio.
Okay, and in that sense, how are you looking at the broader commodity space, particularly given the demand out of India for things like oil and coal right now?
The commodity space, I believe, is in a long-term bull run. I perceive the prices will probably go up into the next year. We are seeing some kind of a tempering in crude right now, but come peak winter and early next year, I think the prices will be higher than where they are today.